Next, we have Maxime Bernier. After a career in finance and banking, he became the executive vice president of Montreal Economic Institute, then served as Canada's Minister of Industry, Minister of Foreign Affairs, and Minister of State for Small Business and Tourism. In 2018, he launched the People's Party of Canada. Today, his talk is "A Monetary Reset is Coming and Canada Isn't Prepared." Ladies and gentlemen, please welcome Maxime Bernier.
Hello, everybody. Thank you, Jean, for inviting me in this kind of presentation to speak at your conference for the second time. And you may agree with me, this conference consistently brings together a serious and thoughtful group of people interested in ideas. I must say, you have to be truly interested in ideas to be looking forward to my presentation on monetary policy. I've been talking about monetary policy for a long time, and I've noticed that most people don't care about it at all, even those generally interested in economics. They find it boring, too technical and complicated, or worse, irrelevant, with no real impact on their daily lives. And if you listen to the meaningless jargon-filled press conferences of Jerome Powell or Tiff McLean, it's perhaps understandable why many people come to that conclusion. But I see it differently. I find it fascinating because monetary policy is central to a vast range of economic, political, social, and even geopolitical and military issues. So why do I and many other commentators believe that a monetary reset is coming? That is to say, a fundamental restructuring of our financial and monetary system. It's because we are finally coming to an end of an era when, for the first time in history, the world has operated on a fully fiat monetary system. Most people believe that the current fiat monetary system is the norm. They think the pieces of paper in our wallets are real money. But for thousands of years, money in most societies was gold and silver. Until about a century ago, those pieces of paper were actually certificates, promises you could exchange at a bank for real money, gold or silver coins. The main difference between real money and paper money is that there's a limited amount of real money, but you can print as much paper money as you want. And central banks can now create unlimited sums of money with little more than a keystroke. And you may agree with me, there's a group that is very interested and enjoys this power. Politicians. It's very good for them because it allows them to spend more without having to impose unpopular taxes. But of course, this devalues the currency. The more currency in circulation chasing a given amount of goods and services, the more prices rise. Inflation is a hidden, indirect tax that makes everyone poorer. And through history, governments have debased the currency by reducing the precious metal content in coins, mixing in less valuable metals like copper to mint more. And today, central banks create money out of thin air and buy government bonds to fund their deficit. The mechanism is different, but the result is the same: inflation and loss of our purchasing power. After the Second World War, the US dollar became the world's reserve currency under the Bretton Woods Agreement in 1944. Actually, July 22, 1944. The Bretton Woods Agreement was not a pure gold standard like in the 19th century. Only the dollar was partially backed by gold at $35 an ounce. Other national currencies had fixed exchange rates to the dollar, and only foreign governments, not individuals, could exchange dollars for gold. But it still imposed some restraints on money printing. And as you know, in the 1960s, the US printed a lot of money to fund its Great Society programs and the war in Vietnam. European countries, France in particular, with the goal, began exchanging their surplus dollars for gold, and Fort Knox reserves were shrinking rapidly. So, on August 15, 1971, Richard Nixon closed the gold window. He suspended the dollar's convertibility into gold, abolishing the final vestiges of the gold standard. And national currencies began to float against each other, and the limits on money printing vanished. Since President Nixon closed the gold window, major Western countries have funded unsustainable spending with fiat money and are now drowning in debt, especially the United States, as you know. But contrary to Nixon's assurance that the dollar would, and I quote, worth just as much tomorrow as it is today, end of quote, the dollar has lost about 86% of its purchasing power since 1971. What cost $1 then cost about $8 today. What's unique about money printing is that it doesn't, cause inflation, especially I'm speaking about the US in US, because as you know, the US dollar is the world reserve currency. And thanks to that, because the US are able to export their inflation in other countries. With most international trade conducted in dollars and central banks worldwide holding treasury bonds as foreign reserves, there is immense structural demand for dollars. The strong demand tends to overvalue the dollar, making imports cheaper for Americans. So the world produces goods, sells them cheaply to US consumers, and then uses the dollars earned to buy oil or more US treasuries. This arrangement has allowed the US government to run permanent large budget deficit, funding a global military empire and high standard of living by abusing the privilege of the dollar being the world's reserve currency. But like all unsustainable system, this one has downsides, and the good times cannot last indefinitely. This is the essence of the Triffin dilemma, named after economist Robert Triffin, who identified the problems in the 1960s. Triffin noted that a country whose currency is the world's reserve currency, must constantly supply more of its currency to the world in order to meet international demand. And that means inevitably running permanent trade deficit like in the US right now. One consequence is that industries relocate to cheaper countries, hollowing out the domestic manufacturing base. While other countries focus on production, the reserve currency economy, the US, specializes in moving money around and becomes financialized. It is very nice for Americans to be able to get lots of cheap goods from abroad in exchange for money that does not cost anything to produce. But if your economy becomes less and less productive and competitive as a result, how long can you remain a major power? It is nice also to have foreigners willing to finance US huge budget deficit. But how long can debt accumulate before it becomes unsustainable? And furthermore, the more dollars are created and circulated around the world, the more confidence in its long-term value erodes. And other countries begin to question the advantage of using and holding dollars. And that's happening right now. Money printing, trade and budget deficit can work for decades. But 50 years after 50 years, the side effects, job loss, inflation, become overwhelming, and what you get is the Trump presidency. While communication from Trump's social media and the White House may appear totally chaotic, I believe there is a strategic direction underlying it all. A plan to protect the US economy from negative effects of having the world's reserve currency while retaining its benefits. The plan may involve bringing back gold as a neutral international reserve asset to replace the dollar. But the great challenge is managing this transition without triggering a major depression or financial crisis. I'm going to say good luck. When we look at the economic and geopolitical situation, it becomes clear that the monetary reset is on the horizon. There are many clues that is telling us that it's coming. The first and most controversial measure is, of course, Trump bringing back tariffs to make imports more expensive. Although he claims foreigners will pay for it, that's just his typical BS. Tariffs are a tax that Americans pay. That is not going to solve the problem, though. A lot more is needed. Another step is engineering a lower dollar value relative to other currencies to make US exports cheaper and imports more expensive. The trade tariff turmoil has contributed to this. As you know, the dollar is down about 10% this year. And Trump said a few weeks ago, that a weak dollar is a good thing. He also mentioned his name is economic advisor Stephen Miran to the board of the Federal Reserve. Miran wrote a paper last year explaining how weaken the dollar to make this transition. The tricky part is the $37 billion debt, which will cost $1.2 trillion in interest only this year. The debt is still growing and may spiral out of control. How do you finance huge deficit when foreigners earn fewer dollars because they export less to the US, and a devalued dollars make treasuries bond less attractive? This could force higher interest rate or a return to money printing by the Fed to buy treasury bonds, provoking even higher inflation. Key members of the Trump administration are hinting at change. Vice President J.D. Vance has spoken about the disadvantages for the U.S. of having the dollar as the world reserve currency. Treasury Secretary Scott Bessent said before joining the administration that we are in the midst of a Bretton Woods realignment that he would like to be part of, and he also admitted to be a gold bug. President Trump himself, in April, tweeted, "He who has the gold makes the rule." And have you noticed Trump seems obsessed with gold? He promised a golden era for America. He wants a golden dome against missiles. He offered a golden card visa to foreign investors. And he redecorated the Oval Office by putting gold everywhere. Meanwhile, record amounts of gold were moved from London to New York earlier this year, sparking a speculation about replenishing gold reserves at Fort Knox. I believe a key move being considered is the reevaluation of these gold reserves. They are still officially valued at $42 per ounce. This price was established in 1973. By a simple accounting trick, they could reevaluate these gold reserves to today's market price of around $3,300. The Fed could create nearly $850 billion for the Treasury. That covers about 6 months of deficit. Significant, but not enough to make a difference. But what if gold were revalued to $10,000 or $15,000? That would be a game changer. This is not a conspiracy theory. Just 2 weeks ago, the Federal Reserve published a paper discussing other countries' experience with gold reevaluation. This monetary reset may be formalized in a new international conference like Bretton Woods, especially since much of the world now has interest in moving beyond the current system dominated by the dollar. For example, BRICS countries and emerging countries are fed up importing inflation from the US and helping fund American social programs and imperial wars by using the dollar. China stopped buying treasuries bonds a decade ago, instead accumulating huge gold reserves. It is also using gold to internationalize the use of its currency, the yuan. Russia did the same and has been buying a lot of gold for decades. You must say they have a good reason to want to de-dollarize after the Americans weaponized the dollar and Western countries seized or stole their dollar asset following the invasion of Ukraine. These sanctions were a powerful warning to every other country about the risk of holding dollar assets. And you add to that, central banks worldwide are buying gold at record rates to the detriment of the dollar. Gold is now the second largest international reserve asset ahead of the euro. Every week, there are new agreements between countries to bypass the dollar in international trade. New platforms are being developed including by the BRIC Plus nation, to facilitate non-dollar transaction, potentially using gold. What I'm telling you is the de-dollarization is happening. A further step could be a return to a form of a gold standard where currencies are backed to gold. That would place the world economy on a more solid foundation, given that all major countries have been printing money like crazy and have unsustainable debt, including Canada. This transition will be painful for many people. Americans will likely be poorer due to more expensive imports and higher inflation, except, of course, for minority who hold gold. It's regrettable we have to go through this. Throughout centuries, governments have always used currency debasement and inflation to get out of debt and refill their coffers. In fact, the United States has undergone other monetary reset in its history, and most of them followed the same pattern: devaluation of the dollar and revaluation of gold. I would much prefer another way to get rid of deficit and bringing back productivity, like drastic cuts to spending and lower taxes, but it won't happen. We saw how little Elon Musk was able to accomplish with his Doge. And Canadians will also be in a tough situation because Canada is not at all prepared for this. Although we mine and export a lot of gold, Canada is the only G20 country that has no official gold reserves. We sold most of it in between the 1980s and the 2000s, and Prime Minister Trudeau sold the last of it in 2016. Former Bank of Canada Governor David Dodge explained in an interview that they got rid of the gold because it was an antique with no returns, and so it didn't make any sense to hold it. How disconnected from reality can you be? Most of our reserves in Canada to support the Canadian dollar consists of US Treasury bonds. When a monetary reset does happen and the value of those Treasury bonds collapses, while the value of gold skyrockets, we will find ourselves in a very tricky situation. My advice to our government: start selling those bonds and building a gold reserve now, and drastically cut spending to balance the budget in 1 year, and then cut taxes. But the Liberals in Ottawa are doing nothing, and Conservatives are silent. Doing nothing means the devaluation of our dollar, higher inflation, and the loss of our purchasing power. Nothing good. To conclude, the world is rapidly de-dollarizing. Behind the headlines and chaos, all the conditions are now in place. A fundamental reset of the global monetary system is on the way, with the depreciation of the dollar and reevaluation of gold. Gold is being remonetized as the only trusted, neutral store of value. Its role as a hedge against currency devaluation, inflation, and economic and geopolitical instability has only strengthened over time. Major changes are coming in the months and years ahead. It is crucial to understand these forces and prepare yourself accordingly. Thank you. Merci.
Hi, I recently went to a great talk about crypto and specifically Bitcoin. Now, like gold, Bitcoin even more so is finite in how much there is out there. Is it possible in your mind that Bitcoin specifically again could be an escape hatch for inflation?
Maybe, but it's a little bit more risky than gold. And I must say that, other countries and Western countries have gold reserves, so they don't have any Bitcoins. And so it may be nice to have it, but it's more risky. For me, I prefer the old way. Gold was proved, like I said in my speech, that, when we have an economic downside and situation like that, usually when you have gold, you are able to keep your purchasing power. But I'm not against Bitcoins, but it's more risky. Personally, I don't think it will be, the money of the future. But we'll see. I may be wrong.
Hey, Maxime. You make a good case for gold as currency for settling international balance of payments. I could see other countries demanding that. I have a harder time believing that gold will be remonetized domestically.
Yeah.
What are your thoughts on which direction we're going to be going in that? Is it going to be a central bank digital currency, stable coins? What do you see happening there in Canada?
Yeah, I think you're right. They will use gold internationally to try to have that new system. But I don't think that, we'll have a Canadian dollar or US dollar that you'll be able to go to the treasury and asking for your gold. It was the case in US before the 1930s, but I don't think it will be the case again. But, if the international new monetary system is, a little bit based on gold, that will be a new foundation for the future. And actually, that's why I'm not giving any financial advice, but I believe that everybody must have a little bit of gold in their portfolio to be sure to preserve their purchasing power. That being said, using gold like in the 19th century, I think it won't happen. But the other system will be better than this one because it's the first time in our history that we had a full fiat monetary system. And so, as you know, it's going nowhere right now. And but that is, I think, internationally it's going there. But in every country, I don't believe that they will we will be able to go back to, our central banks and asking for gold. It would be too good to be true.
Oh, yes. Oh, thank you, Maxime, for all the information on Canada. But what about our resources? Like, how are they going to use that as I keep, I'm wondering, thinking in the back of the mind, because I think, the resources must be some kind of collateral and asset. And another question, too, is the timing of all this. I don't know if anyone can give us a timing because I know that Brent Johnson talks about the infrastructure of that dollar is so vast, and for that change to come will take some time as well. So the timing of this de-dollarization, as well as for Canada, our assets. What do you think about our resources? We're quite rich. I believe we are.
Yeah, for the timing, I don't know, but what I'm telling you is it is happening right now. Countries are de-dollarizing. It can be 2 years, 1 year, couple of months. I don't know, and but this is the trend, and the end goal will come, but I don't know when. Concerning Canada, you're right about that. We have a lot of natural resources. Like I said in my speech, we have gold. We are exporting a lot of gold. So what can happen if the federal government and the Bank of Canada are not, buying gold for their reserve, for the Bank of Canada, their foreign reserves? The federal government can nationalize gold mine. I don't like that, but, that can be a solution that they will find, So, yeah, so that's why I believe that, we'll be in a very difficult situation in Canada when that will happen, but there are extreme solutions that the federal government can do. Yeah. So, but to do all that, you need to have a government that will, believe in private sector and in free trade. And so you need to be more productive. You need to attract capital. You need to lower taxes. You need to deregulate. You need to do a lot of things to be sure that Canada will be more productive and our entrepreneurs will be able to thrive. But we are not doing that right now. We are on the opposite side. And the Conservatives are not speaking about that because it's not popular to tell the truth. And, if you want to be elected, you'll do survey and polling, and people want more government. They want more security. They think that more government, that would be more secure, but they're losing freedoms. And so when you speak for more freedom and more more personal responsibility, it is not popular, but that's the right thing to do. That's why we are doing that at the PPC. But maybe that's why also we were not so successful in the polls and also at the last election.
Hi, Maxime. Great speech. And as a precious metals broker, I mirror your idea that everybody should have a little bit of gold and silver. But specifically because what the purpose of your talk is central bank digital currencies, right? They have basically told us that this is the goal for the reset. They want central bank digital currency, which is effectively the removal of sovereign and personal rights. Because when you mirror that to digital IDs, basically they have the ability to press a button and remove, all of your assets and, to the original speaker's point, your property. Could you give us your thoughts on the potential for the U.S. to back up their treasuries with gold? Because they've been floating this for a couple of years now. So beyond the repricing of gold itself, the backing of U.S. treasuries with gold is a potential third option between, rather than the more probable result of hyperinflation or default, because the debts become unmanageable. But if they can back it with gold and silver, or gold specifically, do you see that as a potential for us to do as well, or for the U.S. treasuries to do?
I don't think so. Politicians doesn't want to have anything that will try to control them. They like to spend, and voters like to receive money that they think is coming, from nowhere. I believe that, like I said, they will use an accounting trick, and they will reevaluate their gold reserves, and so to be able, to create that inflation. If you look at everything that is happening in the last couple of centuries, that's always that inflation. That's a financial repression, and it may come. So concerning, digital currency, here in Canada, the Bank of Canada did a survey, and they worked with the finance department for implementing a digital currency. But they said, that's not that popular, so we won't do it. But the Bank of Canada and the federal government, I believe they will do everything to promote that. And that's another way to, be sure that they would be able to control us. But for now in Canada, it is not in the short-term plan of our government to implement a digital currency. The Bank of Canada said 2 years ago that they won't go ahead with that. For now, that's the most important. In their press release, they said for now. But that may come in the future. Thank you.